Tech and gold continue to power the markets higher as we track the U.S. government shutdown and the flare-up in tensions between the U.S. and China. Let's get more on the markets with Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel with Wellington-Altus Private Counsel. It's good to have you today. Thanks for taking the time.
Great, Lindsay. Good to meet you.
Yeah, you too. It doesn't sound as if there's just one factor here that continues to drive up the markets. So what are some of the factors that you see, some of the biggest players here?
Yeah, there's a lot of factors. The primary factor right now is earnings growth. We're seeing it last week with the banks, or earlier this week with the banks, phenomenal growth, the JP Morgans and Bank of America, Wells Fargo. Today we're seeing some of the tech stocks do very well with Taiwan Semiconductors revenue growth forecast up to mid 30%. So that's the primary reason. There's also some monetary policy continues to be supportive of the markets as well, and the trade tension is somewhat being discounted by the markets this week. We saw last Friday it was paramount, but now it seems to be put on the back burner. So continual support for the market.
What about gold as well? I mean, we're seeing gold reaching fresh record highs once again today, partially because of those tensions between the U.S. and China. What are you seeing there?
Yeah, it's phenomenal. We're seeing, every day. I think it's up, $60 today. It's up $50 every single day. It's quite something. It's formidable. I'm now active in some junior miners, and but they're all in sustainable cost, being about $1,300, and the cost being of $4,200. It's just a license to print money right now. It's really the other point, though, on the other hand, is what's driving gold is really concerns about the fiscal policy and the deficit spending that is happening in the U.S. And so while it's really good news, from a macro standpoint, you really have to look at the questions about what is driving gold. So it's not all pure positive on an economic front.
Yeah, I take your point on that. And a lot of people, when we're looking at some of the other precious metals, silver surging as well, a lot of people kind of overlook that, right, when they see the price of gold going up so much. But silver is another one that could potentially be playing a factor here in driving those markets up.
Yeah, actually, silver's outperforming a little bit, and precious metals are just, with the theme right now of with questions about the U.S. dollar, precious metals will continue to be supported. So it's great for Canada. It's supportive for the market. When you're seeing 60% increases in gold and silver, it's a very good time to be a miner in Canada.
No kidding. When it comes to what investors should be looking for, like the best opportunities for investors right now, what sectors would you pick?
That's a great question. Right now, with I'm looking at utilities, believe it or not. With my clients, they tend to be in the retirement area, so we're really looking for some strong dividend-paying stocks with stability. But there's also the AI demand for power, and that's something that the utilities have to be in play. One stock I'm looking at in the U.S. is Duke Energy. They're very involved in nuclear energy as well. So with all the CapEx spending for AI, well, how are we going to power it? So we really got to look to the utilities and regulated revenue. So while we're a little bit frothy on the AI side, I think it's a good play to get some of the capture of the AI situation and opportunity, but at the same time, really buy a stable dividend-paying company that's regulated revenue.
Okay, so utilities is the sector you like. You said Duke Energy is a stock you would buy. Another stock that I believe you would buy is Aritzia. Is that right?
Yes, definitely. They had earnings last week, phenomenal growth. I think 41% growth in the U.S. Well, in Canada, we're talking about elbows up and everything. We really got to promote our greatest companies that we have in this country, and Aritzia is one that is really shining bright. Right now, about 6% of the revenue is in the U.S. They define the proper product. They define a proper process. It's incredible management. Transition to management was done flawlessly. It's just flying on all cylinders. They're expanding by 12 stores next year, primarily in the U.S. And it's just a situation where it's one of Canada's greatest companies. I think as a Canadian, we're all talking about let's buy Canadian companies, let's buy Canadian goods. Well, let's promote our greatest company in the country, and that is Aritzia.
Yeah, that company really doing well, as you say, expanding into the U.S. If we're taking a look at one last stock pick from you that you would buy today amid everything that's happening, that's Schneider Electric. Can you talk a little bit more about Schneider Electric?
Yeah, Schneider Electric is a company that's a European company involved in the energy management system. So your building efficiency is really controlled by energy management. The technology that they have, they're used for you'll see them in anything to do with electric meters or whatever, but they're also very involved in the data center movement. They acquired a company last year, Mortivar, which is involved in the cooling of data centers. So while we're building data centers, let's buy companies that are involved in that. Caterpillar is another one that's done very well because of the construction of data centers. So if you can buy a good company that has stable profits already and they're able to get the upswing of the AI demand right now, it's a win-win and great opportunity.
Okay, that's all the time we have. Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel. Thanks so much for joining us. Appreciate your time.